Okay, good morning, folks. Welcome back. Here's the economic calendar for today. Today's Thursday, March 2nd, 2017. Our focus this morning for the New York session is going to be the Canadian dollar. As you can see here, the CAD has a 8:30 high impact news release GDP. Again, I could care less what the information is over here. It's not important to me. And we also have unemployment claims also for the dollar. So we should see some volatility this morning. Let's go back over to our charts. Bear with me one second while I transition. Okay. All right, we should be showing the dollar index. Confirm it before I begin. Awesome. Thank you very much for your assistance. All right, so we have the dollar index has moved obviously above the equal highs that we were monitoring, looking for an objective on upside draw for buy-side liquidity. Yesterday we had a strong close as we were hoping to see. So far we've seen some follow through. So on the upside, we're looking for a reason to get back up into this area in here, clear out the bodies of these candles. Ultimately, if we get follow through all the way through the rest of this week, it's going to be indicative of moving beyond these highs up here. So if we see that, that's a plus for going long-term, short-term, and swing trade for foreign currencies. There is a condition that may be unfolding in the euro dollar that we may be taking advantage of if we get the action I'm looking for this morning. The action I'm looking for this morning also is not to see a blow-off move on unemployment and or the GDP number for CAD. I want to see those same things keep things moving along in the same direction we're seeing here. I like the fact that we've had the SMT divergence between dollar and CAD, dollar and British pound rather. And we'll look at that in a moment. But overall, it looks like we have a potential measured move type thing going on in here on dollar. I'll show you what that means graphically. Okay, I'm going to use the wicks first. Okay, so we have this low here up to the high. Move this over a little bit. Here's the low to the high I'm measuring up to. And I'm just going to hold down control and drag that box so I can duplicate it. And I'm going to take that and lay it right on the low right there. Notice that puts us right up back inside this fair value gap again. Now, in my opinion, I think if it goes to this area here, it's not going to just stop. I think it's going to want to clear the bodies of the candles again and then go one more time through and trade up into the 104s and then maybe make a run for those 105s and 107s as 107s as said a couple years ago as an upside objective long-term for the dollar. So this may have been what was necessary for it to get back in sync with this long-term uptrend, but we want to see evidences of that this morning in the unemployment numbers. So if we're looking for, hang on one second. Yeah, the mouse may not be appearing, but it will be in the recording. I will draw special attention to the day's candles if I'm specifically referring to something, okay? Thank you for that, Tanner. Yeah, it's weird. Some of you are seeing the mouse and some of you aren't, so I'm not sure what that is all about. I know I can see my mouse, and that's all that matters right now. We'll be able to see it in the recording. The expansion above these equal highs, though, we want to see that continue. It's nice to see the daily candle. We opened, traded down a little bit, and we rejected that. So I want to see the daily range expand continuously and still try to break through these bodies in here and make a run one more time to go above all the way through this range and get above these bodies in here. And let's take a minute to make a notation of that. I am so stoked. I'm ready, man. I'm so ready for this year to get going. I don't think anybody's prepared to see what's about to happen. So we got upside objectives in the form of this here. And I can see probably maybe a small little pause or a retracement if we get above the body's candles here on the 9th of January. Okay, so the open on the 9th of January, that's the highest candle body that we would go from to the left right now where we're at. We have a little bit of a wick that closed in the fair value gap that was formed from the 3rd of January. But we already passed through that. So that's what I want you to think about. We've already came up here on the 11th of January and closed in that fair value gap where price was only delivered on the downside. Then price came up and gave us long wick, closed that in, and then we went lower afterwards. Where we're going here right now presently in the last few days, I don't see us just going up here a little while and then retracing just to drop again. I think we're going to make another run at those old highs. And that is what we've been waiting for. We want to see some kind of sign that we're looking for a longer term level. Since we have resistance levels or buy side liquidity on the daily for the dollar index that it may be reaching for, that's going to put pressure on foreign currencies. So our focus is going to be looking for the weakest foreign currencies that are already ready to sell off or has been selling off. Euro looks really good for that, and we'll take a look at that in a minute. But I want to see, again, the evidences of that still continuing today. I don't want to see a strong rejection while we're above these equal highs in here. If we get the numbers to facilitate a rejection and then start to break down, that would be a little bit disconcerting because I would rather see it show a willingness to want to go higher. Not too explosively higher. I want to keep it steady and slow because if it's reaching, it won't give us an opportunity really to get in there and go long. There will be another buying day where we're going to be looking for a down close day, and that'll give us an opportunity to get long. We can go into with a short-term long. We can go in, a short-term sell for foreign currencies. But what we're looking for on the dollar index is we want a down close. But today, we definitely want to see an up close. We don't want to see any kind of rejection. Does everybody understand that so far? Okay, good. So I got one person saying they didn't understand, so let me make it real quick and short. The dollar index is bullish. We think it's going to make a higher high on the daily, higher than the high that was formed in the high formed on, what day is that? The 3rd of January of this year. So I think right now, technically, it looks like we're going to make a higher high. We're looking for 104s. If that's the case, we want to see still today bullish prices, and we want to see a bullish close. We do not want to see a rejection and go lower on the employment numbers. We don't want to see that. We want to see it trade higher, but we don't want to see it explosively move higher. We want to see it move up gradually a little bit today, and then have one down close on the daily chart. As soon as we get a down close on the daily chart, we will be going in hunting a long position for dollar-based rallies. In other words, we're going to be looking to sell like euro dollar, pound dollar, and I think there are 2 focus points for today. So we've beat that up enough. Let's go over to the euro. All right, so we have a little bit of a fair value gap that's not noted in here, but I want you to look at the down candle here, the lowest low on the daily. Its high comes in at 104.47, so we're looking for 104.50, 3 pips above. And remember, we round up, so that would be the next downside objective, and it's about 60 pips or so from where we're at right now. We've got to be mindful, though, that if we get one more low in here, they might try to send it higher. If it goes higher, we'll be looking for a retracement back into 105.50. And again, that's assuming if we get below the low formed on February 22nd. So if we blow through the low of 104.90 and then come back up, like say it wants to reject and have like a 3 drives lower and then trade back higher, I don't see that as a low yet. In other words, I'm not expecting this low to stay intact right now. I think that the dollar is going to push this pair lower. And if we do get a little bit of a snapback above this low on the 22nd of February, I think it would be capped by the last up candle here, right in here. And the reason why I like that is because this candle has a big long wick, the lowest short-term low on the 22nd of February. I don't see that as a reason to go back up into it because we've already did that today at the open. We opened, traded up a little bit, rejected, and then we've expanded on the downside intraday. So what we're looking for is a move through the February 22nd low and maybe one up close, and that's what we're looking for as a sell. If it doesn't go below the low today and we get the follow through on the upside on dollar index and we get an up close on euro dollar, we will be looking to go short tomorrow. And I'll give you a day trade so you guys can put a little bit of money in your pocket. So, but we were looking for something to do on the sell side. Preferably, since we're going into the weekend, though, I would rather it not do that because I don't want to hold anything through the weekend. So, again, hopefully we'll just get that move through this low, and then maybe Monday we'll get an up close setting the weekly range up for a one-shot, one-kill, where we can go short on euro dollar and make a run down into the fair value gap, or maybe even below through a rejection block, which is the lowest candle body that comes in on the December 21st, 2016 candle. Yeah, so to sell short on euro dollar, we're looking for an up close on a daily. That sets the precedence. That'll give us an overbought condition short term, and that'll give us a reason to anticipate further expansion on the downside. And it's just like we need a down close on the dollar. It's going to be the opposite. So think about what we're doing. We're waiting for that opportunity where during a retracement, an up close in a down market, what is that? That's up candles. They become what? New selling opportunities. So we're waiting for them, the smart money, to give an up close on euro dollar, preferably after this low is taken out. And then we'll sell short euro dollar with an expansion idea down into the fair value gap, and then making a run below the buys of the candles, and then ultimately the lowest low formed on January 3rd, 2017. So I think that's what we're looking for. Now, if we get below that low of 103.40, wow, we could get into the 102s real quick. It could be real sudden. So just be mindful of that as well. I think that's the business for that. But yeah, long term, we are looking for parity on euro and dollar. Cable. I like what we're seeing here. It's already giving us an opportunity. I'd love to see this pair stay just like this. It can fancy dance around and move around and all, but I'd like to see it stay here with this up close, because everyone going into tomorrow will see this as a potential low, and they'll want to go in and buy it. And I don't suspect that we'll close in this range in here. I think this will be just one little catalyst where we start to move lower and expand down. We have this void in here. So once we get below these lows, if we do it all, the candles formed on January 18th and January, I think it would be 19th. Yeah, January 19th and 18th. If we get below those two candles and expand, it will probably do it rather quickly. You'll see another repeat of this big down candle like we saw yesterday. That will probably be what we'll see going in for downside objectives. And then we have a small little fair value gap in here where price has only been delivered on the upside. Let me put that in so you can see it. Okay, so that's what we're looking for fair value. On the biggest candle on 17th of January, a huge up move in there. That price has only been delivered on the buy side between the two candles that's referencing the shaded area. So lots of reasons why we can expect to see 21 big figure and 2090 as a downside. So that gives us about 200 pips potential downside range to work with. So there's really absolutely no reason why we can't find something in that. So that's what we're looking for. Now, has anybody noticed the SMT divergence formed on the high here? Let me show you where I'm looking at. Now that we're in short-term trading discussions, you're going to see a lot of SMT stuff coming in. You have the higher high here. Okay. And on the dollar index, let me make a reference of your dates. So you can find them in your charts as well. February 14th and the 24th. Real easy. 14 and 24. And the 24th right there. Good grief. Come on, Michael. There we are. So we have on the cable, we had that false rally pushing up and clearing a buys of the candles. rejected by bullish dollar. Okay, so that's why we mentioned this weekly order block in here that we were watching it dip into. It dipped into it again, it dipped into it again, and then finally we get that explosive move through the equal highs, and we wanted to see follow through. So far today we've seen that. So that bodes well for the longer term objectives that we're looking for down here. And again, this pair I think has the ability to go a lot lower than this low over here too. And I think long term, British pound has a lot more to go down in terms of comparing the euro and cable. So I think they're going to see a lot more downside for this particular pair. So I think we'll be looking for real strong reasons to get short. If and when we get down here and close in this fair value gap, the next little short-term retracement after that on the upside, that will be, in my opinion, one of the best swing trades that we're going to have probably for this year. And it will be a selling position for cable. And we'll be looking to hold that for as long as we can milk it. But we have to wait for it to get down there. Okay, so in your notes, we want to see it trade down to the fair value gap. How long it takes, who cares? We want to see it get down there, trade below it, and then come back up into that same area. Okay, that'll act like a inversion level where it becomes a level for support or a downside objective right now. We want to see it retraded to later on as a resistance level. Okay, so if we get down below it and trade back up to like 120.80 to 120.90, if everything lines up, that will be a swing trade in the future for a downside objective. And I'd like to see it do this. Trade lower, go into the fair value gap, pause a little bit, maybe have a short-term little bounce, but then trade through it one more time, but do not go below the low formed this year on the 16th of January. If we trade below the fair value gap and then trade back up into it as a resistance level and trade back to 120.90 and 120.80, either one of those two levels, again, we're not looking at zones, but we're looking at those specific price levels. If we trade back, and it could retrade back up to the 121 big figure too, but if it does that, and it does it in retracement fashion higher after trading below the fair value gap, but leaves the low formed on the year intact, again, that is going to be one of the most powerful, huge down moves for this year, especially if we're looking for 105s, 107s on dollar. So if we get to 104s on dollar index, and this has yet to make a move below the old low here, oh man, you talk about easy money. That's what it's going to be. We'll probably see several hundred pips just in that move alone. So that's something you want to be mindful of. Keep that in your notes on your daily chart. Don't clog it up. Find an area over here on the left-hand side where you want to keep that as a mental marker where, if we get down to that level, think about what I just told you. Have it in your calendar. Have it in your notes. That should we get down there, one of the conditions I'm looking for, that right there will be an amazing swing trade. So we'll be looking for that. Aussie dollar. I think Troy's got some luck today. He's should be seeing his short position panning out for him. We had some breakdown in here. We closed in a fair value gap here. And I think we may see a little bit. Where are we at here? So we have the range of the two candles here. The down, jump to the wrong candle, Michael. Okay, we had the range from the two down candles here on the daily chart. Mean threshold for that will be your objective should we see acceleration on the downside and upside on the dollar. We'll keep things simple and short today with that. So you're looking for that, and it might stall and pause in here. What time is it? A couple more minutes, and then we'll have our release of the news. But yeah, about 4 minutes we'll have our news. So I gotta get ready to get over to the CAD pair. But I think we'll probably reach for 75.62. If we come back up, we want to see it hold resistance at this level right here. Watch. See all the bodies in here? Looking for the lowest of the body. That means the open on the candle of the 8th of February. That open is 76.20, nice institutional level. That should keep price down. Let's have it anchored right to the right one. Right there. And of course my OCD is going to be flaring now because this little thing is not behaving. So we could, if we get a little bit of a knee-jerk reaction, if it comes back up, this should act as resistance. Now we broke support, potential market structure shift. So if we get back up here and trade down to the mean threshold, if you are short, take something off, leave a little bit on, you might get a run down below where the sell side liquidity is, below here. Where are we at here? Hang on one second. I got a question. Question is what about the swing trade idea? The dollar bullishness has shown a clear breakthrough here, and we've had continuation. And this has already shown a willingness to want to break down. I didn't want to see it break down sharply. I didn't want to see it go down at all, really. I wanted to see it hold in the consolidation because I thought we'd get one more drive higher. It's finally bending its knee. So if it does go lower than what it is, this would be your objective here. I don't want to buy it now. I want to wait and see what we have for this level here, because this may be a catalyst for another drive to this level here. Too much dollar strength, and finally with the Aussie dollar finally getting to, it can't hold up apparently to the dollar index now, so we're going to have to wait and see. Now this level, okay, the mean threshold, that may be a better area to buy if we get weakness on the dollar. You have to balance both things, the dollar strength. If the Aussie dollar would have been holding on to its ground and not went down today, that would have shown relative strength. But we've seen two old highs here on the dollar broken and upside still today. If Aussie would have been showing what it's been done in the last months, a few months or so with dollar strength, Aussie has been reluctant to go down. That's not happening right now. So we're seeing distribution in Aussie. So you have to go back and look, okay, well, if that's now finally happening, what would be the upside support? This level here should be offering support. And if it doesn't, then it's going to want to reach to this level here, which is the middle of these two down candles. That's also essentially the equilibrium price point between this high and this low. So it may want to just go back down into the 75.60, 75.65 level. As it relates to Aussie, I'm not interested in trading it. Does that make it a little bit clearer for you, Chase? There's other pairs that I think are more in line with what the dollar's doing, and the dollar to me is the king. And this is why I was suggesting in the last few sessions when we do live sessions or reviews, you know, for Troy or whoever else is going short on Aussie dollar, that's a trade I would not be taking. And I admitted that, you know, openly. And it's not to say that you shouldn't do it, because you know you have to take your own trades and have your own opinion about what it is. But personally, this pair has shown relative strength against the dollar when it's been rallying. And in my experience, I've lost money doing that. And it's easier to find trades that are moving in concert with what the dollar's doing. So if the dollar's going higher, to me, it just makes better sense to look for pairs that want to go lower. And if this pair or any other pair like it would be trading higher when the dollar has been trading higher, that does not show market symmetry. And I know it looks like, you know, well, it's the highest one up, so therefore it's got a lot more to fall lower. And it doesn't mean that. It just means that you have more likelihood to see a pair like this rally when the dollar sells off versus looking for it to sell off when the dollar rallies. Does that make a little bit better sense? Or I just personally wouldn't be selling short the Aussie dollar simply because it's shown well. I mean, if you look at what's been going on, you know, this whole time from December, you know, Aussie's been an awesome upside. And that's why when we were looking for dollar weakness, we were focusing primarily on being bullish on Aussie dollar. Remember that? We were looking for reasons to see this pair go higher, and it was moving for us higher. We were not looking at any weakness in this pair at all. So that may be changing. We may be seeing the final stages of that happening here, but it is what it is. Yeah, I think I did. I missed the CAD. Let's go into an hourly chart. Let's see what we got here. Not so much. Bodies of the candle, sent it up, rejected so far. We have equal lows in here. Could see 33.40, 33.35, and then we have the order block down here. It's already been traded to here. What's dollar doing? Dollar wants to hold on to its gains. I like cable doing what it's doing. Can't go lower than an hourly chart. I appreciate your enthusiasm, but we have to stick to the rules. All right, so we have a down candle right in here, and 33.30, and then we have the high on that candle comes in at 33.25. So if we lose this low in here, we could see 33.35 to 33.25. That would be nice to see a little bit of a retracement. If we get a down close on this pair, that may set up a nice buying opportunity right on the heels of finding support at the old candles that we have noted here at 133.30. So we have that also. So that rejection block here, the buys of the candles should offer some support. And that would be also really, really good because look what it leaves intact. Do you see it? If we retrace, go lower, and have a down close today, what does that leave in the marketplace on the daily? Candy land. We have an old high here on January 20th and today. Okay, so that would be nice to leave that there. And man, if they leave that like that, that's almost like easy. And it's like easy stuff. So if we can get that scenario, and here's the thing. Let's just say we cap the weekly range today. Okay, say the news today puts a weekly cap on the range, and it's Thursday, and it's usually what can happen. It also is one of the things we talk about in the market maker manipulation templates for the weekly range. This is one of them you're actually going to learn about. And I'll talk about it now because it's happening potentially here now. So that way when it happens, if it does, I can pat myself on the back and say, see, I did you a favor, did you a good service, I talked about it before the fact and explained it. If we have made the weekly high today, okay, and then we have a down, say it doesn't close down today. Say we have a down close tomorrow, but we don't go down below 33.25 or 33.30. That sets up a wonderful buying opportunity next week because also, if we think that price is going to go up to fair value and ultimately go above these equal highs, where are we at right now? We're essentially at about equilibrium or halfway point. If it's going to leave the equilibrium price point, it's going to do it slowly, lethargically, or dynamically on the second portion or second leg of the price move. There you go. Somebody's been studying. Right. Now think about this. We've had price already move dynamically higher. So if it's moving quick down here already, that means that they're not probably going to give a big, deep retracement and give everybody an opportunity to get in there. So we have to be thinking very specific about where they may retrace back to, and don't expect a long, deep, several multi-day or a week-long retracement. We may only require it to trade down with one or two down closes, and with Sunday. Some of us have Sunday candles, some of us don't, but that's still going to paint two candles. So if we get a weekly range high today on dollar CAD, it caps the weekly range. It doesn't go any higher today or tomorrow, but we have a close that's down today or down on Friday. Preferably, it would be awesome if we can get it down close today and tomorrow. That's a loaded deal, long scenario, if we leave 133.30 intact as support. It can touch it today, it can touch it tomorrow, but it cannot trade through it. If we get that condition, we will have a easy long trade to take us up about 150 to 200 pips, easy there. So now think about what this is suggesting. What did we say the range was on the downside for cable? How many pips? About 200, right? We have also about 200, well, Tim's getting crazy saying it's 700. It was 200 pips. Slow down, cowboy. We got about 200 pips on the upside for dollar CAD, and we're looking for potential range of downside on cable about 200 pips too. So we're starting to see signs of symmetry there. You want to be able to see those things happening. Euro dollar, we potentially have a lot more than that, and I'll go into greater detail on this weekend. I'm going to give you a little bit more of a top-down analysis. And now because we're in short-term trading, I have to have notations on the charts. So there's going to be commentary a little bit in the charts also. And I know some of you have friends. I know some of you are probably storing charts in mediums where people can get a hold of it. Please, I'm asking you not to do that, because really what I'm doing is I'm telling you basically ahead of time in static form how I'm going to be trading. So if it's shared with the public, or if it's, if you tweet something and it comes across, I'm going to be very, very upset, and you will be removed from the mentorship. But my charts are now going to have a lot more information, whereas now I've only been really highlighting levels for you to study. Now I'm going to tell you what I'm expecting in the scenarios, because we have to be a little bit more specific, and some of the templates you're going to use and learn this month are highly specific to certain market conditions. So that way you can see why I think certain things are going to unfold and what that looks like in general terms. So that way you can see, okay, it's almost like market mapping before the fact. Okay, this is what I think is going to happen. It's going to do this, this, and then that is the outcome. So you'll start seeing that more on the charts. Volume keeps cutting out. Don't move the knob then, because I'm not doing anything on my end. Just if it's an audio issue, I think I'd be getting a lot more. It's just one person, Luigi. So I'm sure the recording will be okay for you. So we're seeing, like I said, we're seeing signs of symmetry coming back in the marketplace. So that's awesome, and we'll be doing hopefully a lot more volatility as we go into the second quarter of this month, which is awesome because my schedules are almost outlined in a time frame where we're right at the time when the markets start getting busy, and we're in the short term and day trading model. So it'll be nice. And just for a quick look, dollar yen, we have these equal highs back in here. There's a big buy side liquidity draw above these equal highs. We've already went above the rejection block in here. If we see again expansion through, this wick has nothing to do with resistance. We're going to be looking for a price to draw back up into here. Just as a reminder, I hate this pair. So yeah, we're looking for a price to get up into here. And let's do this, Michael. It's a little bit more appropriate to do this. So we have these equal high candles in here, and then we have this wick. So I want to include that. So it may just dip into that area there. What is that level? The high comes in at 114.39, and the high on this is did I say that wrong? I think I did. High is 115.37, and then the high on this is 115.39. So we're looking for 115.35 to 115.40 as an upside on dollar yen. Swissy should be, yeah, it's starting to reach for its objectives. We were calling for one more drive higher on this when we come off of a bullish order block on a daily basis. Again, I hate this pair as well, but we have a big, huge liquidity pool resting right above here. Right above there. So what does that work out to be? We got 103.30. Yeah, 103.30. So we got what? How many pips is that now? From where we're at right now, 103.30 as an upside objective, 200 pips. You starting to see a theme here? Tim's got 700 again. So yeah, we're starting to see a lot of symmetry in terms of the targets and objectives. So that's good. We want to see evidences of that. The more you have things in agreement with objectives when you're looking and doing your analysis, certain swing objectives, day trade objectives, intraday, same thing. If you start seeing intraday models when we go into day trading, if we're looking for the dollar to move, a certain number of pips or points, we should be seeing the opposite of that, and sometimes a little bit more on more aggressive pairs like cable. Sometimes outperforms a little bit. They get a little bit excited and go farther than you probably think they will. But when you start seeing multiple currencies or pairs in this case, suggesting a specific number of pips or points in terms of their unrealized objectives, that to me has always been a precursor to market symmetry. So if we see these ideas start appearing in the charts, to me, it bodes well for really, really nice trading coming up. So let's just hopefully we get it, continuing, and we don't see a breakdown today. Let's get one more check on dollar. Starting to fizzle a little bit, but not a strong rejection, which is great. Dollar CAD, euro dollar. Get it right, Michael. All right, so we have price trading down into, it should go a little bit lower than this. Yeah. Cable, like I said, I like to see it stay with an up close in here. And preferably if we can get another small little range on Friday with an up close too, and hang around this level in here. Not break down. If it starts to break down, then unfortunately it's going to be a missed opportunity. But we want to see it consolidate in here. Have basically keep the range we have today. Small little up close tomorrow. No big range. Now it can trade up and trade above today's high tomorrow. Go there, but then not have a big expansion. That might be a potential move too, because if we see an up close today and an up close tomorrow on Friday going into the weekend, I am selling short British pound, and I'm going to be looking for 100 to 200 pips, and then I'm going to leave a small portion on as a swing trade potentially to get down below that 120 level and see if I can get a little piece of that. Then if we get that scenario where we trade down below the fair value gap, I'll add back in whatever position I took off here. I'll add it back in here. And I'll give you an example how we can add into a position that's already been established from a higher time frame up here, or a higher level, not higher time frame. And let's see, gold. I like this. See how we're holding this in here? We're holding consolidation around in the same price range. If we lose this low, we're going to go all the way back down into this order block. And let's do that right here. Get a feel for its range where it could go. Yeah, it puts us down into this order block right here. And inside this series of down moves. So it might have to go a little bit into here. Also overlaps with this down candle. So that might be the level. What's the high on that candle? 12. So 12.15, 12.10 downside. If we lose this low, I would not like to see that. Again, I want to see gold just stay in consolidation and just not really worry about dollar strength, because I really want to be long gold and silver, and more preferably the silver market. So there's a lot of things I'm weighing out, and you can see why it's going to be very confusing. If I talk like this every single time we did a live session, you wouldn't know what I was doing, from one day to the next. That's why I like to be able to do day trading and short-term trading, because it gives me something to do, and even the long-term doesn't really make a big a deal to me. But since you're learning, I'm giving you what's in my mind. I'm thinking kind of like out loud. So the dollar, it can still rally, but I don't want to see gold break down. I want to see it hold and maintain a big, large consolidation. How can you take out a portion of your position? I think I did a video of that somewhere. You just go into the position and you want to, depends on what your platform is. I think it's going to say modify position, and then you go in and you'll just, oh no, you can, yeah, you close the position and you click on instant execution, but you change your position size. Say you have 10 mini lots, okay? You can take off one and change it to, okay, I want to sell 1 mini lot. And if you do that, it leaves 9 on. It's not that big of a deal. All right. Well, if you have micro lots, it's the same thing. So yeah, nothing's really. All right, so looking at what you're looking at here for dollar CAD, not much volatility today. For a high impact news event, that really isn't that big of a deal. I mean, we had a little bit of a gap down, traded back up, but nothing's happened thus far to really get you too worked up about. Just be mindful today. We have these equal lows down here, and it's also an order block down in there. So price may want to draw down into this area here. I know, I messed up. I'm thinking about day trades. You have no idea how hard it is to be going through this many months and not have pulled up the charts, because I want to see I want to see where my entries are going to be at. And there's your order block for downside, and it's below these equal lows. So just on an intraday basis, I know some of you guys are all watching the intraday anyway. And since there's really nothing for me to talk about as a swing trade, we'll just throw this in here and maybe keep your attention for a little while. Last up candle, we traded right into it here. This may be just a little bit higher up, and then maybe roll through and give you a little bit of a intraday scalp. You might be able to sell it for 133.60 and look for 133.40, so you get a 20 pip little scalp there potentially. I wouldn't demand much more than that. The pair's already strong, and if you're just looking for volatility plays, that might be one that you can get today. But apart from that, I wouldn't touch it, not in any other manner. So we'll see if that comes to fruition. Today, what time is it? 8:40, yeah. On hourly, yeah, it looks nice and clean. So we might see it come down into that level. Do I sometimes use liquidity voids and fair value gaps interchangeably? They're essentially the same thing. Voids are just a larger gap. I guess I could really just say one side delivery of price. It's an easier way of saying it. So you just look for areas on the price where a range in price action has only been off, well, like this right here. This whole move here up, this candle on the February 28th. Let me just put a little arrow on it to so you guys, I don't know why some of you can't see my mouse, but that candle right there, okay? So on that candle, price was expanding, and then on this candle, right there, it's low, comes down a little bit, but it leaves the range open right there. Now that's going to be a gap in my opinion, but if you go into a lower time frame, that may become a liquidity void. It's all relative. It's just basically all you're looking for is areas where price has only been delivered on one side. Since it's only been offered on the upside, prices passed through one time up. It came down a little bit, but left that little area in there. So that's a little bit longer term downside objective. If we lose this low here, that's where you would see price reach for. And when you start blending these things with PD arrays and if the data ranges, you'll know right away what you're looking for and holding out for. It's not a big deal. It just gives context to what you're looking for. Let me get that off of there. Wow, there's a lot of questions just came through. Our whole perspective on the market has changed because of the dollar did yesterday on a daily basis. It has my attention, and we're following what the dollar is doing relative to its daily chart, and we're looking for it to trade higher. And there's a reason, multiple reasons on a daily basis for dollar to go higher, and it's already shown a willingness to want to do so. It's a really nice, strong move through the equal highs. Notice it didn't just go above it and pull back in the range and close. That's what we did not want to see. We saw a break through it. It's traded through it, and now we've had one more time to open, trade lower, and now we're higher. So it's indicating that it wants to go one more leg higher. We don't see this as a void or fair value gap with these two big down candles here on January 4th and 5th. Yeah. But because the high on this candle is 102.95 on January 11th, it passed through and closed in that range. So all of the sell side delivery only had been balanced out. There's no imbalances there now. So the range going back up into the 102.90 area, closing in that fair value gap and liquidity void, that's been filled in. So think about what this is implying. There's no other reason to go back up and create like this move here. Let me show you. Okay, say tomorrow, I'm going to just hypothetically draw tomorrow's candle. If it were going to be like this, I'm just giving you an idea of what I'm believing is unfolding here and why. Okay, let's say, say tomorrow we get a down close, okay, and that candle would be like here, in this area here. Not a green candle, but it's just for sake of argument. Let's say this is a down close, okay, and this would be a black candle. We could see, let me do it like this because I might be able to use this chart later on. Say your scenario looks like this, okay, we get a down close. And then what we're looking for is, like on Monday, Tuesday, Wednesday, we're looking for this type of event. Now, my question is as you watch the daily chart unfolding like this, what are you referencing over here on the left-hand side as a resistance point? There isn't any. We have a small little rejection block right here, watch. Right here on the down candle formed on January 9th. So this candle here, right there, so we have this down candle here, their bodies, that's the rejection block. We trade through that, we're going to look for expansion on the upside. We're not concerned about this big wick right here. That's not an issue because that was filling in the fair value gap and liquidity void right in here. So all that was filled in there. So what I want you to be thinking is, since we've already filled in that gap, excuse me, there's no real reason for price to want to go back up to these levels except for to eventually do that and that. So does that kind of like give you an idea of what I'm looking for? That in my mind, this is the ideal optimal scenario. If we get one down close tomorrow and maybe even Monday even, But ultimately, if we stay above the equal highs that we just traded through, this would give me the outcome I'm looking for. There's no framework on the left-hand side, all in this area here. Nothing over here constitutes a reason why we would expect a reversal or a sell-off. There's nothing institutionally in here to frame that, with the exception of the bodies of the candles formed on that high, or this level here at 103.25. So I think apart from 103.25 being a rejection block, there's really nothing to slow the dollar from going higher and making a higher high. So if that's what we see, or if that's what's panning out potentially, what do we see? We see dollar-based rally, and that's going to drive euro dollar and cable lower. And yes, this would create all of the shorts on euro dollar and cable, they would be low resistance liquidity runs. In other words, easy, low-hanging fruit. There's a lot of questions that have nothing to do with what we're talking about today, and I appreciate your enthusiasm, but we're going to have to wind it down. The overall context, though, what we're looking for is we're looking for the market to trade higher on dollar, and that only changes if we get that back down below these equal lows over here. I'm sorry, equal highs, rather. Good grief. Right there. So we have to remain above we need to remain above closing basis above these equal highs, and then that will give us the outline that we just modeled for a run up into the 103 level and ultimately up into the 104s, because I think that's ultimately where we're going. What day does the trading contest start? The one I proposed to everyone else, or when am I trading my live accounts for the Robins? Which one are you asking, Grace? Well, I turned to MyFX private last night at 7 o'clock, and because I'm still working on payments, I'm probably not going to start actually live trading until next week. But I'll put it this way: when I post a smiley face on the free Twitter, that's like the bat symbol to go look on the Robins standings, and you should see my name in their leaderboard. Not the #1 spot. I'm just trying to do my best to place on there at least this month. I'm trying to work it out where I can just get to the bottom of it and then tease everybody going up one step at a time. But I don't want to do too much too fast, because I'll lose all the fireworks. But that's it. I don't want to fill this up. This is business. We're not talking about fun stuff in these sessions. So I want to be escaping. Remind you all that, let's get one more quick look at CAD. Yeah, it's not going anywhere, sitting sideways. Be careful with Aussie. So if we get an opportunity to see it trade down to that level and you are short, take something off, okay? Just by show of ones, are any of you in here short Aussie dollar? I'm always cringing asking, because Frenchie says, I'm paid. Good. Very good. All right, well, I'm going to escape, leave you all to it. There will be, come on, cable, keep that level. Euro pound dollar index. So again, on the upside, next level we're looking for is 102.25. So about 15 more pips it can go. And if it trades to that level, then it would be justifiable also to see a down close. But I don't want to see it take off. I don't want to see a big run and big candles in here yet. All I want is just give us one down close on the daily dollar index, and then we have a green light go to go in and start taking some longs, not longs, but shorts on foreign currencies. And that's it, folks. I'm going to leave you and wish you all a very good afternoon, morning, wherever you're at in the world. Just be mindful that we will have another live session tomorrow at 8 a.m. And then we may, depending upon how much I get done this weekend, we may be going to 7:30 start times on Monday. And that may be our window, so from 7:30 to 8:30. I don't know. I got to take a look at that. If not, we'll stick with the 8 o'clock to 9 o'clock. And what I'm trying to encapsulate is the New York session. The news embargo lifts at 8:30, so that way it gives me, if I start at 8 o'clock, it gives me time to talk about some things, talk about some ideas and some scenarios, and if I have any housekeeping things, I can talk about that too. And it gives us time before the news releases, and then that way, if we're taking a trade, it gives us a little bit of a buffer before the actual action comes into the marketplace. If today would have been a lot more exciting with the CAD, that would have been unfortunate thing, because I'm jawboning still about a lot of different things, and I'm also made the mistake of keeping the question box up, which was very distracting. But that's it, folks. I'm going to close it. Wish you all a good afternoon. I will be back in a short recap video today